Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. It's Friday, January the 20th. Let's get in the zone, the cash money zone. I've been all over the internet this morning trying to figure out just different leads or something to talk about. One thing I started looking about, there was a big USDA report coming out today asking these guys, why are the corn, why are the beans down when this USDA report made it look like it was going to be really bullish. The USDA report came out that exports were a lot higher than anybody had expected. They came in at 760,000 metric tons versus 550 to 750 on the high end was what the analysts expected. This is coming off a little bit. We just broken into positive territory in the corn. We've been negative all morning. But if I asked the locals in here, none of them even knew about this report, which is probably why we were down on such a bullish number. It's kind of funny. I asked one guy, he was like, I don't know anything about it. I'm 3-bit at 4. All right, take that. So then to go into the financial room, we got the Fed heads speaking, all right? Basically, they're all saying that they're not going to do any more bond buying until they see some more of these economic indicators coming out. They've all been coming out pretty bullish, which doesn't give them any incentive to start doing any more bond buying. So they're going to leave everything kind of as is, status quo, see how everything works out over there and in our economy before they make any more decisions. They're kind of on the back burners right now, right? Take that. So then we go on to my levels. It's going to be a short one today. A lot of these people are bugging out of here because we're supposed to get a bunch of snow here in Chicago, kind of extend the weekend for these guys. So it's kind of starting to quiet down already. It's not even noon yet, so these guys are starting to lead out. The markets are probably going to quiet down, but here's the S&P levels. On the low end, it's just below that 1300 handle. It's kind of become the psychological level. I got it at 1299. That's going to be the support. Resistance, it's kind of moved up a little bit since we've been trading up through that 1206 area. That's kind of going to be like your pivot area now. 1312 right now is going to be my upper end. It's going to be a macro resistance. It's going to be real hard for us to get through that, especially if volumes start trailing off a little bit here. In the bonds, I've got support. Is going to be 141.16. Bonds, equities, all kind of coming off a little bit. We've got the S&Ps in negative territory. Dow's kind of bucking the trend. It's up. Nasdaq's in negative territory. But on the upside in the bonds, my resistance area is going to be 143.13, and just above that is going to be 144.02. So on the upside, that's what we could see. If the equities continue to sell off, we might actually see this counter trend happen. All right. If you can't take that, take it easy. Just nailed coffee too.